Good day, everyone, and welcome to Admiral Markets and Forex Street joint webinar Wolfe Waves New Approach. My name is Nenad, and today I will show you some quick tips about Wolfe Waves, how to identify correct Wolfe Waves, and how to trade with Wolfe Waves. Before we begin, standard risk disclaimer explaining that CFD and Forex trading are leveraged products and can result in losses that exceed your deposit. So those are not suitable for everyone. This presentation and video is for informational and educational purposes only. The video is not part of the .co.uk website, but the globalnews.com website. Please, before you start trading live, read the full risk disclosure on this website. So as I said, my name is Nenad. I am a trader, professional trader, also a full-time analyst with Admiral Markets. I trade with them, I do the analysis with them, and definitely for all people who know me, I started on Spider's Den, and my nickname is Tarantula. So today's agenda: reasoning behind Wolfe Waves, why use it, when to use it, rules for charting proper Wolfe Waves, or if you use indicators, which things you should pay attention to if you want to trade with indicators, and finally, how to chart Wolfe Waves and how to make entries with Wolfe Waves. So the reasoning behind Wolfe Waves is those are the waves of supply and demand that form their own equilibrium. What does it mean translated to trading terms? First of all, if you watch price action, not just indicators, you will notice always some movements that tend to be either trend moves, counter trend, or ranging moves. The reasoning behind three types of moves is because the price wants to be in the equilibrium. The price always wants to come to its mean before proceeding further. The mean can be and can happen after a trend, after retracement, or during the consolidation. When price is getting too high, it's just a matter of time when the price will correct. Also, it happens with a downtrend. When price is dropping, it's just a matter of time when it will correct. Remember that the trend exists on each time frame. Each time frame is the dimension on its own. 1 minute time frame is, as you know, 1 minute is very fast moving, but it also has its own trends. A trend on 1 minute can be 20 pips, 15 pips, even 10 pips. A trend on weekly time frame can also be 1,000 pips. So, you need to distinguish that each time frame has its own trend. The higher the time frame, the higher the time frame, the stronger the trend. But also keep in mind that for intraday or intra-week trading, we don't go higher than 4-hour time. Usually, how I trade and what I do with my analysis is 1-hour time frame. In my opinion, 1-hour time frame is the best compromise between having setups and waiting for setups to develop. The best thing about it is that the thing is, if you want to trade with Wolfe Waves, you need to know that how I trade Wolfe Waves, and I again say, in my opinion, my best trades on Wolfe Waves and best setups happen on 30-minute and 1-hour time. And because this is price action form of charting, Wolfe Waves can also appear on lower time frames, but I don't pay attention to them. I pay attention to 30-minute and 1 hour, and of course I use also ATR indicator that will tell me about the price confluence. Now we will do Wolfe Waves. I will strictly I will go with Wolfe Waves without any additional indicators, without anything, because I want you to learn how to chart Wolfe Waves the best. And if you use indicators, what you should be paying attention to Wolfe Wave indicator, because I know there are dozens of different Wolfe Wave indicators on the market, but not each of them is correct. Not each of them is showing Wolfe Waves correctly. Have in mind that most of Wolfe Waves indicators there are based on zigzag indicator. And let me tell you that I personally don't use those kind of indicators. I don't use zigzags. I really, I'm not into those kind of, let's say, artificial help from MT4. And I think that zigzags should not be used with Wolfe Waves, but it's, of course, it's my opinion. But it's easy, it's easiest to make the indicator by using zigzags. Okay, so this is the reasoning behind Wolfe Waves. Price tends to reach equilibrium. Equilibrium is set once the price rejects from the line that it makes and it comes to its target line, or at least it makes 50% towards its target line. Why we use Wolfe Waves? We use it for breakout trading. First of all, we use it for breakout. Also, a lot of old traders told me that they used it for counter trend trading. I don't know how they traded like 20, maybe 25 years ago. But the main thing is how I do it. I do counter trend trades. I also do breakout trades. I have developed some of my own methods for trading Wolfe Waves and some methods that are also well known. I have adapted to suit my trading style, and that is what I will teach you today. So, in my opinion, most of those trades happen as counter trend trades, and mostly you will see that Wolfe Waves appear in trending markets in a form of potential counter trend moves. Also, because of the specifics of 1 to 3 trend line that I will explain, we can also go with breakout trading that I also like. Also, we will use Fibonacci extension tool that I will explain. And don't forget that Wolfe Waves follow the rhythm of the market. So once you master how to chart it, it should be really easy for you to trade. You should not be having any problems with trading, but the main thing is how to master to chart Wolfe Waves properly. Now here in this blog here that I did with Admiral Markets, it's called a new approach to Wolfe Wave trading. I have explained some interesting facts about confluence, about using ATR with Wolfe Waves, also how to use Fibonacci extension confluence. I also included a GIF so you can see how I charted. So this can be also great entry into the Wolfe Waves that I'm explaining today. So pay attention to what I will be showing now. First thing is we go with bullish. We start always at the top. Okay, so we start at the top. Don't forget, it's very important for you to understand. The point 2 is the top. The point 3 is the bottom of the first decline. I will also show you the chart so you will see the logic. The 1 point is the bottom prior to point 2 that 3 has surpassed. This is standard definition, and this is how proper Wolfe Wave charting goes. The 4 point is the top of the rally after the point 3. The 5th point is the bottom after point 4 and is likely to exceed the extended trend line of 1 to 3. And this is the entry point for a ride to the estimated price at a live line 1 to 4. Trend line of 1 to 3 and extended trend line of 2 to 4. Now, this could be confusing, but this should not be confusing when I show you now. So, let me show you the chart. Here, you can see we have just an example of Wolfe Wave bullish and bearish. This is the example of a breakout trade on a bearish Wolfe Wave. The main thing here, guys, is that we start. Okay, I'm losing the slide. Let me. Okay, now I will go step by step. First of all, we said that point 2 is the top. So whatever you do, you need to know that point 2 is the top prior to the move 1. So Here we have the top. Okay, 0.2, 0.1, 0.3, 0.4, 0.5. 0.5 is always the entry in the market if you want to trade. Standard rule for Wolfe Wave trading says that when 0.5 is reached, it's called the zone. When 0.5 is reached, that usually extends 0.1 to 3, that will be your entry. And you ride it towards 1 to 4 trend line. So it's very important for you to understand the logic behind it. Okay. So let me chart here the points. So 0.1, 0.2, 0.3, 0.4, 0.5. Here you see the 0.1 to 3 is a trend line. 0.1 to 4 is a trend line. Okay. 0.2 in bearish bull wave is the lowest point. The highest point is 0.1. So you always start charting from the bottom to the top. So here you have this line. Now you have also, this is 0.1, this is 0.2. 0.3 is here. So you just make a trend line that can extend into the future. You can just array a trend line. Then the first drop after the 0.3, the first swing, is the 0.4. You just connect 1 to 4 trend line and you extend it to the future. 0.1 to 4 is estimated price at arrival. 0.5 is the entry. And what usually happens is that the traders are having the biggest problems with defining this 0.5, because 0.5 can also extend to the upside. You never know, right, when the price will stop its move in the 0.5. That is the biggest problem. But let me tell you, that is why I use Confluence. We will not talk about other things like Confluence at this point, but the original rule says that when you see the 0.5, you should watch volumes, because Wolfe Waves are usually charted in stock markets. As you know, trading in Forex market does not have volume except tick volume, because it's not centralized market. So I don't advise to use any volumes, but rather to use Confluence for this type of entry. So this is classical. When price gets to the 0.5, it rejects towards trend line 1 to 4. And this is the target. Now, before I open live chart, I will show you examples on live chart. Let me tell you that Wolfe Waves are done on intraday time frames. For me, those are the best. We use it for breakout trading. We can also do it for end of day reversals when price is actually retreating. That's good, because that's called profit taking. And we can also have some good Wolfe Wave setups with profit taking moves. And you can also do a confirmation with other tools. Okay, so this is now the best is to open a live chart now, and let me go step by step. Here you have a Wolfe line, very valid Wolfe lines. Every single point has been explained, so I think that you should definitely understand this as I'm talking. So the 0.2 is the utmost point in bullish Wolfe Wave. The 0.1 is the point lowest prior to this point. You can also make this 0.1 and this 0.2, because there are always Wolfe Waves in the Wolfe Waves. So you see, this is 0.2, but this can be 0.1, this can be 0.1 also. If you go with, let's say, small Wolfe Waves used for smaller moves, then you can also look couple of candles behind and chart a small Wolfe Wave. But there is, guys, difference between small Wolfe Waves and bigger Wolfe Waves. And this is a good example. Small Wolfe Waves, simply, they don't have the power. They don't have the power. 0.2, 0.1, 0.3, 0.4. You have trend line 1 to 3. The 0.5 is here. You have trend line 1 to 4. Estimated price at arrival is here. The biggest problem, when Wolfe Wave is very small, it will not reach 0.1 to 4. And also, 0.2 trend line will not be broken. So you see how this is also a mini rejection trend line. See how it rejected it to the downside. So this was not a good Wolfe wave. It appeared, but it was too small. The price didn't have momentum. Here, you see the price is already rejecting from the 0.5. And this is classic Wolfe wave, and this is very, very classic Wolfe wave end. 0.1 is here, 0.2 is here, 0.3 is here, 0.4 is here, 0.5 is here. The price went to 17 or the Swissy, and you see it rejected. This is 4-hour time frame, but as I say, I trade 1 hour and 30 minutes, but this is good just to show you the example, how price respects Wolfe wave lines. Well, the biggest problem here is how to know which is the 0.1, which is 0.2, 3, 4. That is what you will learn in time, or if you don't have a time to learn it, then I advise you to get a good indicator that goes with the rules that I explained, and definitely it should be easier for you to chart Wolfe waves properly. So let's use other examples too. We can try to find some pairs, scan through some pairs that have some bearish Wolfe waves. Let's see, this is a good example. This is bearish Wolfe wave. You see now, I'm showing you the first entry, the first type of entry. Very, very good example, although the price really broke to this 1 to 4 trend line. You see here, 0.2 is the bottom when you chart bearish Wolfe wave. 0.1 is the top. Then you have a swing, 0.3, then the first swing low after the 0.3, and 0.5 usually exceeds 0.1 to 3. This is the zone. If you use other confluence tools, this is usually the zone where we expect the price to react. Initially, the price rejected from 0.5, not for too much, but, well, let's say 35 pips. And it failed to reach the target line. But then when it rejected from the zone, it actually reached the point. So if you made your entry here, maximum number of pips, 37. If you made entry from the zone, maximum number, 85. So you see now the thing with the zone. You need to use other confluence tools to tell you, okay, this is the good zone, and this is where we could actually try to short the price. So I have two methods. If you are not sure where the 0.5 is, you can easily do as I do. This is type 1 entry. Type 2 entry, you don't watch at 0.5 at all. You just need to see when 1 to 3 trend line has been broken to the upside, and when again 1 to 3 trend line breaks to the downside again. It's called type 2 trade, and it is a breakout trade. So here you see 0.1 to 3 has been broken, okay, to the upside, and then the price closed below 0.1 to 3. Usually when I see this, I enter short market immediately because risk to reward ratio is the best. Just let's say that this is 1 hour time frame. The rules are the same. As soon as the price breaks from above to below 1 to 3 trend line, immediately you enter the market. Your risk to reward is much higher because your stops will go 5 pips above the last high, and your final target is 1 to 4 trend line. Sometimes you can ride the price even lower if you are able to use scaling out, or you know how to manage your trade while you're in a trade. That should be enough for you to make a nice profit just by trading Wolfe waves. Let's find some more examples, and then I will explain type 3 entry. Okay, this is a great example. We have a line, bearish Wolfe wave information, 1.1, 0.2, 0.1, 0.3, 0.4. So next time the price hits this level, okay, this 1 to 3, I will just move like this. Okay, so when the price hits this could be, let's say, 0.5, but you don't watch 0.5. If you want to go with breakout, then wait for the price to break 1 to 3 and close back or simply break by 2 or 3 pips, 1, 2, 3 trend line again. And then you just make a move towards 1 to 4 trend line. So this will be your target once the price makes this move. And finally, type 3 entry is based on 50% of Fibonacci extension. That is what I call type 3 entry. How do you do it? You mark 0.2 and then you mark 0.3. Okay, this is 0.2, this is 0.3, but you need to use Fibonacci extension tool. It's very important for you to use Fibonacci extension tool. Now let's go step by step. Insert Fibonacci expansion tool. You mark these points. It's very important for you to mark these points. This is 0.2, this is 0.3, right? This is 0.1. You mark it like this. 0.1 to 2, okay? Then you just make to the 0.3, okay? And because this is 0.3, you see, you need to make it like this. This is standard Fibonacci extension, but you don't do it like that. You need to do it angled like this. This is the easiest way to remember how I do it. 0.1, 0.2, 0.3. So now you have basically Fibonacci extension from 0.3 here to 0.2. You see how the angle here is like this. You just make it like this. And these are my levels. In order to add 50, you go to, I will show you now, you need to go to objects list. Okay, you go to objects list here, and then you click Fibonacci expansion. You will usually see it here like this, Fibonacci expansion. And this is very easy for you. Now you just click add here. Okay, add. You will see a lot of levels here. These are my custom levels. They're not used for Wolfe Waves, but for Wolfe Waves, you just add 0.50. Okay, and you can write the Wolfe Wave 50 with sign of percentage in dollar. You press OK, close, and here. You see it here. So this is now, okay, this is now bearish Wolfe Wave. But once the price brace gets here, it should touch this trend line that he's broken. Because this is bearish Wolfe Wave, okay, we will do it like this. Fibonacci, expansion, okay, here, here, and here you will see it like this. Okay, let me just move. Okay, it won't move. Just I will do it again. So Fibonacci expansion, okay, from 0.2 to 0.3, okay, and here is the angle like this. Once the price breaks above trend line, hits 50, you enter a sell trade. That is type 3 bearish entry. The biggest thing is that you don't drive the price towards 1 to 4 trend line until 1 to 3 is broken. So let's say price broke through 1 to 3 trend line. It didn't make a pullback below. So it hits this level. Immediately when it hits this level, you enter a sell trade. You scale out here and final TP is here. That is why type 3 entry always works the best when you have more than, let's say, 0.10, let's say 0.20 lots at least. So you can remove the half of your trade here, put your stop loss, let's say, to break even, or here, and ride a free ride towards 1 to 4 trend line. So for bearish Wolfe Waves, this is the way to go. From 2 to 3, and the angle is here. Okay, so you see the angle is here. You can always move, but the biggest thing here is that you have these 2 and 3 first Fibonacci expansion like this, and the extension of this should be angled. You can do it like this as I do. I call it 90-degree angle, but the point is the same. This is your entry, okay? And once the price hits the entry, you just need to wait for the price to hit 1 to 3 target or 1 to 4 if it breaks to the downside. I will use one more example with Wolfe Wave type 1, type 2, type 3 entry. And if you have any questions, of course, feel free to email me. It's pretty much straightforward. Here we have bullish Wolfe Waves. The point here is all of these are 0.1s. It's not important because this is the zone for 0.5. So 0.1, 0.2, 0.3, 0.4, 0.5. How I manage type 1 trade? Well, obviously here the 0.5 has already made its profit. Because if the price hit this level that has the confluence of all these lines, that is 0.5, you see, the 0.5 has already made a profit because it hit 0.1 to 4 trend line. But what if the price went down? If the price went down, for example, breaking here, your breakout entry, type 2 entry, would be when price gets back above 1.5 and hits 1 to 4. So your entry is 1, 3 trend line break to the upside from below. Let's see if I can find other example that will be more clear. Yes, this is good example of a trend line that has been broken. Very good example. 1 to 3 trend line, price went down, and see how it came back above 1 to 3. What happened? It hit the target. Final target has been hit. So this is a great example. 1 to 3, okay, then 1 to 4. See here? So 0.5 is here, but it didn't reject the price. The price went down. And here, immediately after it went back up about 1 to 3 trend line, you see what happened. The price went to its target. I like these kind of examples because 1 to 3 usually breakout trades are the best. Simply because this 0.5 can even extend lower. That is the main problem with all old Wolfe Wave charting. So this is a very good example. You see, now the thing is you really need to be there at your computer to watch this happening because these are usually trades that are 60-70% accurate. So type 2 entry, you see 1 to 3 broken from below. Here is your entry. This is the target. And now the type 3 entry would be Fibonacci expansion. Okay, now from 0.2 to 0.3 like this, and you just move the angle here like this. So your entry would have been here. So if the price went there, you just press a buy order, put your stop loss below 61.8 extension, or let's say below the previous low, and ride a ride towards 1 to 3 trend line. Once 1 to 3 trend line has been hit, you scale out 50% of your trade, move the stop loss to break even, and wait and ride a free ride towards 1 to 4. So those are 3 types of Wolfe Wave entry. If you have anything to add, feel free to ask. If you have anything that is not clear, feel free to ask. You can always read the blog that I publish, so it would be much easier for you to get into the Wolfe Wave first before trying to trade it, and always try to demo trade before you go live. And let me tell you that I do Wolfe Wave live trading also on webinars with Admiral Markets. I have webinars on Monday and on Wednesday. You can sign up. I do trading on, this is demo account, but I do trading on live account. So you are free to come. Feel free to visit my live trading rooms on Monday and Wednesday. It's very good because I also use Wolfe Waves, and I also explain the logic behind my entries when I trade Wolfe Waves. As I say, this is not clearly for beginners, but once you have a good indicator for Wolfe Waves, you just need to apply these rules that I explain regarding entries and try to make some pips on demo account first. I don't see any questions, so I assume everything is clear. As always, you can always ask me, email me. If anything is not clear, I will be glad to explain. Until then, I wish you a great day. We have a very, very good setups on euro-dollar shorts. As you know, a couple of days ago, I did euro-dollar analysis, and you know that I'm short on euro-dollar. And also, you see that I have a small long on Australian dollar at 7,450. So those are not full waves, but just in case that you don't miss my analysis, you can read it always on Forex Street and Unreal Market. Cheers, everyone. Have a great trading day. Talk to you soon.